Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
So everybody, let's take a look at the forex markets. So guys, today again we mostly will take a look at the Australian dollar. I would like to say just a couple of words on the euro and the Great British pounds. First of all, speaking on euro currency. So euro currency behaves really silent right now, so it stands on the same tendency. But as you know, that Donald Trump has signed the sanctions. Although by the letter, the sanction stands against Russia, but Russia has very small turnover with the United States. Its trade turnover stands approximately, I don't know, maybe 50 billion, so it's not really very significant turnover. So, and these sanctions actually brings nothing new to the Russia's economy. So all sanctions that they could accept, they have been signed by Barack Obama in last year. These sanctions, guys, mostly comes again European Union economy. So this is a real big struggle for surviving between the European Union and the United States will be. So what, in 2 words, I just will give you just one example. Some sanction stands against the Nord Stream 2. And in fact, the United States tries to replace the Russian gas with liquid gas from the United States. So you could imagine what will happen in the European economy if they will start to buy the gas that costs 3 times higher than the normal natural gas. So this is really, in fact, this is using some political leverage to resolving on the economical problems. That's why European Union right now takes the stronger position against the sanctions, and it's really, I think that it's some kind of the silence before the storm, because we really could get the very big volatility in the forex market, especially in the euro currency, as soon as this turmoil will start to take the pace. So that's what about the euro currency. Speaking on the Great British pound, guys, you know it's right now. Today it will be Bank of England meeting and rate decision. So, and the tricky moment here stands that really no consensus stands around this event. So on the previous meeting, Bank of England gives the hint on possible rate increase, and in general, following the economical issue, even Platinum Consulting, last month when they have taken a look at the research, they have pointed that it's really indeed could happen, that 1-2 rate hikes could happen, and most suitable month for that is August. But at the same time, there's a lot of doubts among the investors that indeed will happen. That's why Great British pound right now stands just indecision. So usually, if you still would like to make the bet you like the trade such kind of events as the rate decisions, strong statistics, or something of that sort, well, I usually use very small lot, trading lot, and far stop. And I choose the lot so that my stop gives the potential loss as I usually take in the common trade. So this is the one of the possible approach to trading this setup. So speaking on the technical side, you know that 132.50 is our target. The market has hit it. Right now it's calling around it. And from the technical point of view, 132.50 will be definitely the resistance. And from that, if we wouldn't have any Bank of England meeting, I would say that probably it's not bad area for taking the scalp short on the intraday charts with possible minor retracement to the downside. So the technical side mostly supports the idea of the possible retracement here, and from that standpoint, it seems that Bank of England should not raise rate. So, but that's just one side. So be careful if you would like to trade it. Just you will have to think how to do this, because really volatility could be significant, and maybe some stop entry orders you could use for breakout of the important levels or something of that sort. So now to the Australian dollar. The Australian dollar, guys, situation gradually is developing, and mostly it develops according to our view patterns that we have discussed here. So as you can see, market has dropped precisely to our predefined level 79.15. So we have discussed yesterday. And in fact, we said that this actually, guys, the last point where market could turn to some upward direction, because that's in fact the last pattern that we have on the intraday charts where market could establish some upward direction. So if this will not happen, next target destination point market will drop stands at 78.70 area approximately. Take a look on the daily chart. This will be monthly pivot point and daily oversold. So if this will happen, if market indeed will drop here, we could get some kind of the minor hand and shoulders pattern here and some deep retracement, some kind of the ABCD down on the coming week. Probably the major driving factor here will be the non-farm payrolls tomorrow, but today we still could keep an eye on the pattern that we have on the intraday charts and see what will happen. So on the 4-hour time frame chart, you could see the market actually has erased our butterfly as it has dropped here below these lows. And we said if market will drop, this butterfly, potential butterfly, will be erased. Okay, and this has happened. Right now, market stands at some kind of flag consolidation, something of that sort. And in general, inside of the flag, we do not see some kind of acceleration down or something of that sort. It's very choppy action, but not see something of that sort. Action but to the downside. That's why it could become probably just a retracement. And of course, this action is not really typical for the hand shoulders. It's not really stands. It's not common action because on the second half of the hand shoulders, the bears taking the control of the market. Here we see some kind of skewed action on the slope that potentially had something of that sort. So it means that maybe we still could get some bounce inside of this flag higher, and that makes sense with the thinking about the taking the position here. So we'll take a look at the hourly chart. You'll see our regardless triple to Y pattern that has been formed. Market has completed this target pips to pips. So you can see we said if market will fail to hold here, the next destination will be 79.15 area. That indeed has happened. By the way, guys, those of you who have taken long position here should not be disappointed because actually here was a lot of time to move stop to the break-in or grab some profit because market has completed here this minor ABCD pattern up. It's not this is here was not actually total collapse, so it just was normal upward retracement here with the potential butterfly. But later market has dropped here and right now it stands in this area. The tricky moment of this pattern, guys, stands so that the invalidation point of this pattern stands below these lows. And in fact, these lows, 78.70 stands right here. So in fact, it coincides with some kind of neckline. And placing the stop below these lows gives you very good protection because you in fact will have to stop below the daily oversold, and market hardly occasionally will hit it. So this is really a good level to use as a stop order. Also on the 4-hour time frame chart, it is accompanied by the weekly pivot support line. So it's really nice support. Here is in fact what we have on Australian dollar. You probably will have to make a decision by yourself. Patient stands in place. Whether it will work or not, it's difficult to say, but it's really last opportunity for Australian dollar to turn to the upward action. On the upward action, guys, it's better to use not really too extended targets, maybe even if not the 3-8 retracement, but at least the 6-1-8 retracement around 79.90 area. Some bounce on this 70-80 pips. Probable retracement here is possible. Do not use it as some kind of the upward continuation patience, probably just for some moderate retracement inside of the flag. At least grab the half of the profits. This will happen. Move the stop to the break even and rest the half with a possible higher target, something that So that being said, let's keep watching. That's the bullish pattern that we have. If market will fail here and drop lower, most probably it will reach 78.70 area. That will be the halfway to possible larger pattern on the daily and 4-hour time frame charts, potential head and shoulders could start to form here.